Hi, this is Charles Kelly, Money Tips. Well, today I want to talk to you about the overall economy in the US and the UK, and also look at possible threats to the economy and the stock market. Now, the US economy is bouncing back after the lockdowns, and it's growing at the fastest rate since the 80s. And stock markets, whilst they're jittery and seeming to slide, they keep bouncing back. But I think a stock market crash is still coming, if not a crash, then at very least a correction. My name is Charles Kelly. I'm the author of the book Borrow and Grow Rich, and Yes, Money Can Buy You Happiness. Now, the US economy expanded at its fastest rate in decades last year as it bounced back from the lockdowns. Official figures show that it grew by nearly 6% and 6.9% in the last quarter, its highest since 1984. But the Federal Reserve announced this week that a rate rise was, in their words, appropriate soon. So that is bound to affect things when interest rates go up. But I don't think the rates will go up by that much, either in the US or the UK. So that could affect things. And generally, analysts expect that their economy will slow down this year as the government and the Federal Reserve start scaling back all this financial stimulus. We also have rising inflation rates, possible new variants of this and that, and they are further threats to the economy. Now, the World Bank has forecasted that the US economy will grow by 3.7%, but the OECD has said that the UK economy will grow by 4.7%, one of the highest in the G7 countries in 2022, and it's almost back to pre-pandemic levels now. So this is one of the things that the Boris and the government are saying, look, we've come out of the pandemic, we're one of the strongest economies in Europe, if not the world, and things are looking good for the UK in the long term post-Brexit, despite all the teething problems that we're having. So that's some good news for the UK. And major stock markets, though, have been sliding in January. We've seen up and down, and then they seem to recover. You think there's going to be a slide and a crash, and then it comes back again. But the Nasdaq, nevertheless, is still down by over 13%, and the Dow Jones down by 5% in the last month, and that's since they peaked around about December. But they've so far resisted a crash or a full-blown crash or a correction. Somehow money just keeps coming into the market to keep things going. However, billionaires like Elon Musk have been dumping billions of dollars of their own stock. I think Elon Musk sold $12 billion of his own stock just recently. And that could be a sign that they know the party is over or near to over. Now, these people can't sell all of their stock in their own companies because it would cause a panic. But they're quietly putting some money aside. Let's just sell those. And this is, of course, is all reported when directors or owners of businesses sell their own stock. Now, look, we're living in volatile times, right? Shares, I believe, are just overpriced anyway. Central banks have printed money like there's no tomorrow. They've printed more money in the last couple of years than has ever been in existence. Inflation is reaching levels not seen since the 1980s. And Russia could be about to invade Ukraine. And of course, you've got China on the sidelines watching what we do in the West. And they're eyeing the prospects of taking over Taiwan, which they've always said is theirs. So, look, you've got to make up your own mind here. I would seek independent advice, as to what you do with your cash, your money, and your pension fund, because you might say, well, I don't invest in the stock market, but you could find that a lot of your pension money is invested in just that. So you might want to take a more defensive strategy and look to maybe mix it up a bit so that it's not all 100% in shares, equities, or stocks, or whatever you want to call it. But do take your own advice. I'm not your financial advisor. Now, we talk about inflation all the time. The UK inflation rate is 5.4%. But what is your personal inflation rate? How is it affecting your budget personally? Like, in other words, how are things going up? Things that are going up in price affecting you. Now, as I said, the rate is just over 5% at the moment, but essential items such as fuel, gas, food and household items are up, I believe, more than 50% in some cases. Some experts are saying 40 to 50%. I've seen things double in price, and we've certainly seen some people have had their fuel prices double just recently. So that's 10 times the official inflation rate. Now, unfortunately, for families on low incomes, they are hit hardest when essential items go up. Now, the impact for somebody on low income, or if they're on benefits, is far worse, because they spend a much higher proportion of their household budget, their income, on essential things like food and other essential items, just the things that you need in the household, your personal goods. This is a much higher proportion of their income, whereas somebody earning, say, £100,000 a year, they might spend £10,000 a year on food, but that's only 10% of their budget. Whereas someone who's on, say, $20,000 a year and spends £10,000 a year on the family food, that's a third of their budget. So that's just a brief example there. But low-income families do take the brunt of everything, and they pay more for everything. They pay usually more for their electricity and gas because they've got these key meters, or they can't afford to put their supply on direct debits. And there's all sorts of things that they do, for when it comes to banking. They get the worst accounts. For credit, they pay the highest rate. So it is affecting families, and we're seeing a lot of people get into trouble as prices go up. And you have a lot of families sitting there wondering whether they can heat or eat. Now, if you're in that position and you own your own property, do think about looking at ways of releasing equity from your property with some sort of equity release loan that you can live on until you die if you're elderly, and at least you've got money to live on, and it reduces the value of your estate for inheritance tax purposes. So I'm just saying that I go around the shops. I don't go around with a calculator, but I think, whoa, that's gone up in price. Or well, look at that package size has gone smaller, and there's less of these 2-for-1 offers, and even the big supermarkets like Tesco's and Sainsbury's, they've reduced the amount of they're called their value range, which is their own range value items. For some reason, they seem to have disappeared, and they've gone for more higher price luxury items. Now, you've got to look at also what the official inflation rate is made up of. It's made up of a basket of goods, maybe as many as 200 items, and they include luxury items like buying a caravan, flower vases, leggings, cycle helmets, which most people don't buy on a regular basis, and some people from poorer families might never buy those things. So yes, they've got to look at it in some ways, but it is an average rate. They've got to look at it in one way or another, but it is an average rate. But they have changed the way they calculate inflation over the last few years, and that affects people like pensioners who have index-linked pensions, and it's supposed to rise with the cost of living, but the amount that their pensions are rising is much smaller than the real cost of living going up. So that is hitting pensioners either on state pensions or in company schemes where the pensions are linked to the rate of to the cost of living. So there you go. You've got to find a way of getting through this, either by earning more money or tightening your belt. Now, just on immigration for a while, because that is in the news all the time here. Immigration is exploding all over the world, but not the normal type of applying for a visa, applying for work permits, but people just migrating across continents, just walking into a country or coming across the channel as they are from France into the UK, which is still going on even in the winter months. And the traffickers are supplying massive boats now, so you can get as many as 80 or 100 or more on one boat. These are not just little rubber dinghies. These are quite big operations, and they're paying thousands of pounds to get here. So that is something that the Home Office don't seem to be able to cope with. But we know that net migration is accounting for a lot of the population growth in the UK, and the country's population could swell to 70 million by 2030. Now that could be good news for some people. It could be good news, say, for employers who are looking for cheaper labour, even for landlords who are looking for people to rent rooms, which migrants would tend to start off in a room or a shared accommodation to start with. So that's good news for landlords, particularly with HMOs. But there you go. That's inflation. Now, the Home Office, as I said, don't seem to be able to cope with illegal immigration, but they are doing something about normal immigration and cracking down on landlords and employers, or certainly helping employers and landlords to identify people who are looking to work for them or live in one of their houses. And you know that you have to carry out a right to work and a right to rent check. So there's a new digital system coming in from the 6th of April. I'm sure you get more announcements from the Home Office there to find out how you can use the digital system to check whether your tenant or employee has the right to work. That's coming in quite soon. Now, as I said about tightening your belt, is frugality good for your health? Well, a study's come out just showing that frugality is not only good for your pocket, but it also can be good for your health. Spending wisely can not only improve your bank balance, but it can actually make you feel better and healthier. That's because a lot of the poor spending habits that people have are often linked to what we call unhealthy pursuits: drinking, smoking, drugs, and gambling as well. And these are all things that cause stress, can cause other internal health problems. So frugality can be good for your health. I also think that if you're frugal, and that doesn't mean you're sitting at home like a miser, counting your pennies and you never want to spend anything. This means just being frugal, being careful with your money and spending. And I think that reduces stress levels, because people who are broke all the time are worried about things. They're where's the next dollar going to come from? Where's the next pound coming from? Oh, I've got this bill coming, I can't afford to pay it. Therefore, I'll have to go and borrow money on my credit card to fix the washing machine or the car. Now, I've written a lot about this in my previous book, Yes, Money Can Buy You Happiness, and I cover this in some of my blogs and in my courses. But I believe that people that are in control of their spending and in control of their finances are a lot less stressed than people who are not. And even if those people, in fact, are earning a lot more money, if you're not in control, then you're all over the place, and it's part of life control. But money control does, yes, money can buy you happiness, but you've got to be in control of your money. You've got to know where it's coming from and know where it's going. So do you want to get control of your finances in 2022? Well, the answer is, I hope, is yes. We know the habits of millionaires and billionaires and the traits, because success leaves tracks, and you can follow those tracks to become not only in control of your finances, but financially free in 2022. So if you'd like to know more about this, how to do that, how to get immediate control of your finances, look at the free training that I put a link up to. It's a free on-demand training. Click on the link and look at that training, because it could literally just change your life. So get control of your finances in 2022. Click on the link below and I'll see you there. Thanks for listening and have a great day.